Thank you so much for joining us. I'm Margaret Malone. I'm a partner here at Flare Capital Partners. We're a healthcare-focused venture capital firm investing in the next generation of healthcare technology companies. We are excited to host you for this quarter's expert roundtable. We'll be focusing on next generation payer technology. Today's session brings together health plan executives, enterprise buyers, and the operators actively building this next generation of technology. But before we get started, a quick note. We will be recording today's session. We'll make it available on our website shortly after we close. So please feel free to revisit it, share it with your colleagues, and reach out to our team. Before I welcome our panelists to the stage, I want to spend a few minutes framing where payer technology stands today. So here at Flare Capital Partners, we recently surveyed health plan senior executives across our strategic executive network, which represents more than 25% of annual U.S. healthcare spend. Health plans are navigating a moment of acute operational strain between margin compression on the Medicare Advantage side, rising pharmacy spend, largely driven by GLP-1s, and growing regulatory pressure around prior authorization. The status quo is not sustainable. At the same time, AI investment has reached really unprecedented levels, and it's transforming nearly every corner of our healthcare ecosystem. For example, United Healthcare alone is expected to invest nearly $1.5 billion in AI-related initiatives just this year, a level of spending I think very few of us could have imagined just a few years ago. And yet, according to our survey, only 3% of health plan executives believe that AI is delivering proven value at scale today. So a few themes to highlight from our survey. Not surprisingly, perhaps, cost containment is still everyone's focus, but member experience is now competing for attention at the highest levels of organizations, both at national and regional health plans. Nearly half of plans are actively taking dollars away from legacy vendors and reallocating them to AI-native solutions. Another theme we're hearing repeatedly is that provider AI isn't just affecting providers. Plans are increasingly absorbing downstream effects. More than 40% of executives in our survey reported meaningful operational or cost challenges as a result. Buy versus build has become one of the most debated topics amongst health plans. We're excited to dig into that topic today. Most organizations are reassessing where internal developments create advantage versus partnering can accelerate some of those results. So in this environment, trust has become really the prerequisite, not just a feature. We're excited to dig into that topic as well. So taken together, the question really isn't whether AI will reshape payer operations. It's where payers can generate real leverage and how quickly they can do so without sacrificing patient outcomes and quality. We believe the most successful solutions will be those that can create alignment across the healthcare ecosystem rather than simply shifting costs and complexity from one stakeholder to another. So to understand how organizations are moving from this kind of experimental phase to measurable outcomes, we brought together leaders from across the healthcare ecosystem who are living this transformation every day. So we'll begin with our executive strategy panel featuring Eric Berger, Chief Strategy and Development Officer at Humana, and Nathan Frank, SVP and Chief Digital and Technology Officer at Aetna. I'll invite my partner Ian Chang and ask him to put on his former health plan hat to moderate this discussion. Then we'll move into our enterprise buyer discussion and really tackle how organizations are evaluating and deploying AI today. Dr. Amal Agarwal, Chief Medical Officer, WellCare at Centene, will be joining us, along with John Contour, SVP, Product Growth and Partnerships at Optum, and Ruby Com, EVP and CFO at Blue Cross Blue Shield, Massachusetts. And we'll close with our founder panel featuring Akshay Agarwal, co-founder and CEO at Onos Health, Gigi Yuen Reed, Chief Data and AI Officer at Cohere Health, a Flare Capital portfolio company, and Naveen Nagaya, co-founder and CEO at Daffodil Health, another Flare Capital portfolio company, who are all building at the frontier of health plan automation. So with that, let's get started. I'll turn it over to my colleague, Ian Chang, to kick us off for our first discussion. Ian, over to you.
Thank you so much, Margaret. Let me welcome Eric Berger and Nathan Frank to the stage. Eric, Nathan, thank you both for being here. Before we jump in, can you briefly introduce yourself and the organization you are representing? Maybe let me start with Eric.
Hi. So Humana, we are one of the largest Medicare Advantage providers in the country, and we're a large and integrated care delivery provider as well, and quite a scale pharmacy operation. So my background, I've been in healthcare for almost 20 years, started my career actually in an organic chemistry lab, and have made my way into payer provider healthcare services land. And so I'm excited to be here, and we'll turn it over to Nathan.
Thanks, Eric. Nathan Frank, I'm the Chief Digital Technology Officer at Aetna. We serve 27 million members across our commercial, Medicare, and Medicaid businesses. I've been at CVS Health for about 14 years and leading Aetna technology for the last 4.
Great. Thanks so much, Nathan and Eric. As Margaret mentioned in the tee up, we're obviously in a very dynamic and yet chaotic phase of innovation. And in addition to some of the drivers Margaret mentioned, I think even this morning, I read a report highlighting some of the healthcare costs will continue to rise due to the prevalence of AI adoption amongst the providers. So I'm sure both of you are seeing that trend evolving and having to deal with that in a real time, almost on a daily basis. So maybe let us start at the highest level, and maybe I'll have you, Nathan, to start. Can you share with us, our audience, what's your AI investment philosophy, and where do you see and how do you decide where to direct your AI investments in this very dynamic market space?
Yeah, no, for sure. We start with friction. And we believe that the healthcare experience should be easy for members, providers, and all of our colleagues. And we also take the best examples out there from lots of our clients and the best companies in the world like Apple and Meta and Amazon, Google, and some of the financial services companies which have been able to reduce friction in their businesses. And so we set the bar for our consumers at that level. And we look at ourselves as a healthcare technology company, not just a payer. And that shapes how we look at our business and our business cases and what that experience is for those constituents every day. Our philosophy around ROI and the framework, I'll just give you an example. If a product improves the clinical experience or the member experience, the colleague experience, that's a home run. If you can do that with a business case, that's the top 3. We're gonna be in on all of those. We also sit with our colleagues and our clinicians on a regular basis. We have a product and engineering culture. We're embedded with our colleagues every day. We observe their work. We try to look for those friction points, what's slowing them down. And then we take all of those learnings and we start to formulate a joint strategy around how do we reduce that friction in the cycle. I'll just give you an example in care management. We were able to free up 90 minutes per day for every one of our nurses using technology and AI. That's not all cost cutting, right? That's about giving time back to those nurses who joined Aetna to serve members and to get better outcomes. It improves the retention for those nurses. It's obviously improving outcomes. They're spending more time with them. And again, that's one that hits all 3 of those buckets. And we look for examples just like that every single day.
Thank you so much, Nathan. And maybe Eric, same question to you. And also, we recognize Humana, you guys also own a number of provider assets, right? So love to hear your AI philosophy, how you are pushing the organization, maybe also comment on how much of the AI innovation as well as the investments are in the reactive versus the transformative buckets.
So I think our philosophy has largely shifted, I think, over the past 12 to 18 months and in the past 2 months when we've been trying to move from a let 1,000 flowers bloom and let hundreds of use cases see what takes hold to, as of right now, we've essentially gone through the focus prioritization process. And I would say we have a dozen high priority topics that are being monitored at the CEO and ELT level and driving to real tangible results on those dozen things is our top priority in the coming 12 months, as opposed to trying to go for breadth and across many different use cases and domains, et cetera. I think point number 2 will probably not surprise anyone. I think the strategy is really rooted in execution and acceleration as opposed to discovery. I think we've gotten to the point where it is at least to us, feels unlikely somebody's going to discover a use case or think of something new today that they haven't, that the majority of others in the industry haven't already come to. And so kind of competitive differentiation is largely going to be around execution and actually driving towards the results. I've given the analogy, like it feels a lot like they would always say the Saturday of the Masters golf tournament is moving day. You've played the course once or twice before, but this is actually the part of the race or the tournament where people are moving up and down the leaderboard because of how they're actually playing and playing the conditions that they kind of know to be true. That's, I think, the world we're living in right now, as opposed to discovery. I think point number 3, which answers your second question, is like with respect to more transformative bets versus, I'll say, incremental. I think we're trying to take a balanced approach between the two so that we are constantly evaluating how are we going to have impact in the next 12 to 24 months? What are the types of things we know we need to develop to have kind of longer term results? And I just think like table stakes and what is competitively required is the bar is going up so fast that everything we think may actually be a source of alpha and competitive differentiation is rapidly just becoming like the price to pay of competing in the industry.
That's good. That's great. And thank you so much, Eric. And of course, Nathan, for your insights. And so much of this is so refreshing to hearing from both of you because historically, folks often think the payers are not as fast moving compared to some of the other key stakeholders in the system. But hearing like how you're prioritizing some of these priorities in the next 12 months timeframe, it's just incredibly refreshing. And maybe let us move to the second topic. I think a lot of AI and a lot of innovation in general, we often go through the hype cycles, right? So Gartner famously put together the hype cycle. So I think a lot of us, not only on the investment side, but also many of the entrepreneur building companies are trying to address some of these unmet needs, the highest priority unmet needs that Eric, you mentioned, and also removing the friction Nathan, you highlighted, right? So maybe let us start with the administrative use cases, then move on to the clinical use cases, right? Maybe Nathan, for you to start on the administrative use cases, right? Do you think AI is really creating the impact that you are expecting, or are we still in this hype cycle? Where are we on the hype cycle?
Certainly, there's a lot of hype in the entire industry, but let me just start off by saying healthcare has lagged the technology innovation and the investment historically. We've seen a change there. Obviously, Eric has said it's not just, it's a competitive advantage, right? And you're looking for those distinctive opportunities, but all of us are out there trying to drive down the cost of care and improve outcomes. From our perspective, we look at clinical AI, especially the governance around that, not just as the compliance function, but a trust function. And our approach on that is technology. We have to get the right workflows and process optimized. And then you have to have the right workforce and colleagues to execute on that. It's not really a trade-off between one or the other. And I'll just give you an example on that. So in prior authorization recently, so if I went back 6 months ago, a hip replacement or joint replacement used to require 5 prior auths. You'd need one for surgery, you'd need one for RX, you'd need one for PT, so on and so forth. And so we said, hey, let's take the friction out of that entire process. It was less about technology enablement at that point and more around, hey, why do we need 5 prior auths? Can we reduce it to one, have one prior auth bundled together and make that experience easier for the consumer? That's just better coordination across the workflows. And then we said, all right, how do we improve that and enable that with technology and AI? And then just another great example, then we did the other way around. We went and looked at all of our clinicians and just looked at the administrative burden that they have in making decisions. And we said, all right, so if we're going to bring that 5 prior auths down to 1, how do we make that a more seamless approval when it comes in? So we speed up that entire workflow. And so we created a clinical decision support tool And again, we're not taking away the decisions from our clinicians, and we don't use technology or AI to deny any prior auths, but it handles all that administrative burden. And then you add it to the workflow changes and the governance and policy changes that we've made. And honestly, that to me is where we're seeing the most value when you combine those things together.
That's great. And Nathan, sounds like from the examples you have here, as well as the 90 minutes of reduction of the case manager, the care managers you referenced earlier, the hype is very much real, very much of a reality. Eric, what about you? Do you agree? Well, what's your point of view?
Yeah, look, I think we're largely aligned from an industry perspective. Everything that Nathan just laid out, I think, is largely consistent in terms of the principles with which we are approaching AI and its applications across all of the different administrative and clinical domains. If anything, there's been quite a bit of convergence intellectually and strategically in terms of kind of the most relevant use cases. And it's just a sign of the technology maturing that we're a few years into this. And so I think there's more similar than different in the approaches and the guardrails and the principles that are being used. And I think largely a lot of this is coming down to, as my observation as not a technologist per se, is it's around process and people and implementation and working through the organizational layers and just processes that actually is driving speed to implementation and adoption and the quality of the technology, et cetera, as opposed to the technology itself. And I think that's underscored in part by just the prevalence of both the large leading technology players that kind of we're seeing, while there's tons of new startups, like the proliferation and explosion of startups has at least started to slow. You're getting the vendors who have and are building a track record starting to emerge as opposed to those that are brand new and nascent. And so I think we're just living through the maturation of the technology.
That's great. Eric and Nathan, of course, we do want to double click into some of the things you highlighted on the build versus buy, how you make the decision. But before we go there, maybe Eric, stay on you. Obviously, like on the Humana side, you guys own a lot of provider assets as well. So over the last several months, there's an emergence of the clinical AI, almost like clinical AI docs, like autonomous AI that can help perhaps play the role of what a clinician has been playing over the years. Love to get your thoughts on where are we on the adoption curve of this autonomous clinical AI engine, as well as are we ready, right? Or are we still in the early phases of the hype cycle?
Look, I think it's certainly still early. We're going to get there. I think what the AI is doing is at least it's both, again, at the end of the day, care is delivered between a doctor and a patient or a clinician and a patient over the span of 15 minutes, not maybe more, maybe less. And everybody brings their baggage and the day into whatever that 15, 20-minute visit is. To the extent AI in the near term can at least be used to focus that time on the highest ROI clinical discussion and diagnostic step to take, as opposed to casting about with a really wide net for what is meaningful. I think you're going to see value from the AI, even in a human-centered clinical interaction, which makes a ton of sense. I think on buy versus build, I'll hit that question just briefly. Look, our position is when something is available to buy that we have trust in from a tech robustness and a guardrails perspective, we will seek to vend it. In part because it's already proven that it's not going to necessarily be secret and proprietary. If there's an element of the technology or the application of the technology that we see as a true source of competitive differentiation and or where we want to control it specifically, that's going to be one where we look to build and own internally. I think the constant refrain we hear in our organization is there's always a proclivity to build. If you talk to a surgeon, they want to operate. If you talk to an engineer, they want to code. And so technology organizations, I think we're trying to strike the right balance between managing a portfolio of partners, both strategic and more transactional, with actually being very selective around when we actually build. Because while the number of engineers and coding, et cetera, may be large, I think there are true technologists at startups and other places. We're never going to pay as much as OpenAI or Microsoft is going to pay a team to build stuff. And so we need to be really thoughtful about when and how we do that.
Thanks so much, Eric. Maybe Nathan, I know we're coming up on time, like a good discussion. We're short on time. Maybe Nathan, would you mind comment quickly for a few seconds just on how do you make the buy versus build decision internally?
Yeah, for sure. It's interesting. I talked to a lot of CIOs and they're like pausing their investments on SaaS products. I don't think SaaS products are dead, by the way. I think there's lots of opportunities out there to leverage great companies. Our philosophy on CVS is that we've made a deliberate shift over the past 3 to 4 years into becoming a product and engineering company. And that changed the dynamic of how we think about things. First of all, we pick our spots. We're not going to try to build everything, but where we want to have a differentiated experience, we have differentiated relationships, or we have differentiated expertise, we're going to build it. We have the speed and the deep knowledge to do that. In other cases where, like Eric said, the massive investments are going into technology, or there is an amazing organization that's already done something that's differentiated, we're going to partner with them. We have an amazing ventures team and they do a great job going out there and helping us look for partners. And we do a lot of co-development too, and bringing the technology that might be differentiated from a small company into an enterprise or a scale, which has the size, the scope and data to actually make a difference is key for us too.
Great. Thank you, Nathan. Thank you, Eric. Once again, we're out of time. Can't say thank you enough. For now, let me hand it back to Margaret to help lead the discussions of the enterprise buyer segment of this expert roundtable. Off to you, Margaret.
Thanks, Ian. Thank you so much, Eric and Nathan. While we wait for our panelists to join the stage, I'll just kick things off. And hey, Amal, good to see you. Hey, John. I think Ruby will be up in a second, but we'll kick things off. Excited for this part of the conversation. We'll pick up some of the threads from earlier, but maybe just to kick things off, maybe could you each just briefly introduce yourself and describe what your AI mandate is today, and maybe touch on some of the burning needs, use cases, and maybe what could be changing. I think we heard from Eric. It seems like it's changing rapidly. Ruby, we'll start with you.
Sure. Thank you for including me on this panel. I'm Ruby Kim. I'm the CFO of Blue Cross Mass. And our AI initiatives are really focused on having everyone work at the top of their license and having clinicians do clinical work, pharmacists do work related to pharmacy. And we're really focusing our use cases on three things. One is there anything that's going to drive administrative cost savings for us? Is there anything that is going to be helping us with throughput or being more efficient in what we're doing, and things that are going to help us reduce risk and increase quality? And so that's really the framework that is helping us sort through the many use cases that we've generated. And it's good to hear that other people are winnowing that down as well. Look, I'm a payer. Trend is high. It is the highest it's been in 15 to 20 years, remains high. And there's AI that's enabling provider groups in terms of how they're billing. So we're trying to find that balance of making sure that we're proactive and reactive to where the world is right now.
Super helpful. Amal, love to hear from you.
Hey, thanks for having me here. So I'm CMO for WellCare. Been with the company for about 16 months. Before that, I was at a company called Monogram Health, doing total cost of care, pop health management for patients with chronic kidney disease. And then prior to that, I was at Humana for about 7 years. So been in the managed care space for some time, trained as an ER physician. When I think about our AI mandate, it's interesting because we tend to tout efficiencies and SG&A savings, and there's definitely tons of opportunity there. I think we've been sizing it for about 15, 20% of administrative cost reduction that we can find, especially as when I think about and intake and automation, especially future. I think there's just a lot of abrasion prior auths. And so just really trying to rethink what that space looks like and how you can have more care at the point in time with the right information, right decision tools for providers, for patients, for us at the health plan. But then the other angle that we're really thinking about is how do you have industry leading outcomes and points toward medical cost reduction? So when I think of AI from a care management lens, it's not really driven by SG&A. It's really driven around outcomes and what we can do with the existing staff we have and how can we connect with more patients at the right time and deliver more valuable input or interventions. And how do I think about expanding what Ruby mentioned about top of licensure work to really think about interacting with patients, engaging with patients. And when I think about another one is just outbound connections and multimodal engagement. I had a really interesting learning actually a few days ago while listening to a call as we're looking at some AI outbound outreach calls. And maybe it was silly, but up until then, I really thought the best AI outbound chatbot, for example, voice chatbot, would need to sound as real as a human as possible, right? To almost fool the consumer. And while listening to the call, the person on the other end said, "Hey, I know you're AI, but I really appreciate the time you're taking to talk to me and get to know me." And that was a light bulb moment that we don't need to fool or have AI be as good as us. We just needed to solve a problem. And it's okay to be very transparent with what it's solving for and have the right escalation pathways to when you need a licensed individual. So that was just learning, but it was very interesting for me to hear. So just want to share that.
I love that. I think hopefully we can dig into more of that. John, wrap us up here.
Great. Thanks, Margaret. Thanks for having me. I'm John Contour, also a physician many moons ago, and I've had a meandering career, practiced as a health system exec, and then got into the healthcare technology more fully and grew a company and sold it to the advisory board and then sold that to Optum. I've been at Optum for 10 years now, and I lead product growth across our payer and provider portfolio and partnerships and a lot of our M&A work. So I get to see a broad spectrum, especially in the past year or two, of AI solutions that we look to deploy either internally for internal client UHC or Optum Health or Optum RX, but also through a commercial lens as well. And the mandate, I would say, that I have or our company has really goes to our mission statement, which has been the same for years, which is essentially to help make the health of the people we serve in the US better and to make the health system work better for everybody. And it's easy to translate that through an AI lens to say, how can we use AI to do those two things, to help make the people we serve healthier and to reduce the friction and transform the way healthcare is delivered, the processes, and simplify the processes that it's delivered through.
That's great, John. And maybe I'll pick up on the last thread from the previous discussion around buy, build, given you do have a very unique vantage point, seeing several different types of health plans, regionals, nationals, attempting or on a path to be operationalizing things to this AI. Curious from your perspective, what are you seeing as those efforts mature? How is that shaping or reshaping maybe the buy, build questions?
Yeah, it's super interesting. We've gone through or going through a little bit of a hype cycle in just thinking about what we see buyers, whether it's payers or providers, how they're approaching AI solutions. And I think on the one hand, has enabled smaller organizations, lesser funded organizations to think that, hey, it's possible that we can build this stuff ourselves. And we saw it. We saw a lot of that actually, where oftentimes large organizations like some of the folks you've heard from today and down to even mid-size payers and providers were saying to us like, hey, your products are cool, but can you just give us some forward deployed engineers so we can build our own stuff with you? And we still do that and hear that a lot. But I also think that people are now realizing the reality of the complexity of building effective, safe, fair, AI-enabled solutions in healthcare and integrating them into current workflows, having enough data to fuel them, et cetera. or even really super tactical problems like, can I afford the tokens myself or can you get better rates on them? We're starting to see a little bit of a shift back where I think more organizations are looking towards the buy solution. But I think all of this honestly is so new that we are all in the industry trying to figure that question out.
Yeah, I'm starting to tease out some of the ROI questions, which we'll get to. Before we get into that, maybe Amal, talk a little bit about from your seat, like what are you seeing or how do you think about just the governance framework around AI assisted clinical decisions? You talked a little bit about that in your intro, but given also you have a unique perspective across a couple different population types, I'm curious what does that look like?
Yeah, this is where I think innovation really needs to influence policy versus be dictated. And when we think about different use cases of what we can do with AI, because we are in a regulated and highly regulatory environment, so we have to be really careful about what we deploy, especially when it's patient facing. But we have general kind of rule of you can't share patient information, you have firewalls. Even when we think about just using deploying, like for example, Copilot for everybody at Centene to use and the firewalls within that, right? So your manager can't log in and say, what has them all been doing all day and looking at their calendar and the emails type of stuff. So just like basic firewalls that you have to think about, like those types of things just for internal employee use. And then we have to be really thoughtful about how we're using the tool, but it's really it's a trust but verify scenario as well. So we also recognize that there's going to be hallucinations. Not everything's accurate as we test it. And it's really designed to enable some like high volume workflows, but not really replace or take away from the critical thinking or judgment that's required for us to do. So it's an enabler, but not the sole decision maker. And that's really the standing of like how to use the tool properly versus replacing why you're here. So those are some of the ways we've been approaching the governance and approach for usage and adoption and really just trying to use uptake. And then there's also just regular trainings on how to maximize some of the tools that we have today, even when we look at actuarial analysis and really training folks to be more ad hoc in their requests. There's a general tendency to flood Medicon with numerous requests of understanding different analyses. But if you can self train yourself and learn how to do some of those analyses and then come back with higher level insights and discussion, it can actually drive the speed to work a little bit faster. So just some of those approaches around training, patient protection, and then also employee safeguards.
Yeah, and you mentioned earlier around just the ultimate outcome here is kind of moving the needle on clinical outcomes. I'm curious, how do you think about that in your role, given oftentimes clinical outcomes take some time horizon, not necessarily tomorrow? I'm so curious just like how you guys have thought about that.
So you're right. Like when you go to any sort of a pop health program, and if you're lagging KPIs are always going to be around admissions and you're looking at moving the needle for a population, you need ample time to run out and show that you've driven significant value. So you want to look at a 12 to 15 months, some would argue 2 to 3 years, which we know is very hard to do in managed care when you have patients that cycle in and out. So then you take it a step closer and say, what are the things that need to be done that give us confidence that we would drive impact to this population? So what are the things that I should be doing to reduce, let's say, an avoidable admission or readmission? We call those our leading indicators. And so can I look at where I'm at today? And then if I deploy a solution, which I think is really important to measure, because I think there's a risk that we'll be deploying or chasing a AI tool because it sounds really good, but not really clear around the use case that we're signing up for, right? And we might tracking some individual scenarios that sound like they were important or impactful without looking at globally of, hey, what is the investment worth? What is the ROI and why are we investing time and resources on this tool? And so when I think of that, let's say I'm looking at a care management perspective, since we're talking about Pop Bell, I look at time to outreach, actual engagement, and then I look at time of engagement. For example, can I complete a patient interaction from, let's say, an hour, 15 minutes to 25 minutes? And then can I also allow for more frequent interaction with the use of some sort of AI bot that takes away time from my CM so they can focus on more high value work? So these are things that you can look at to say it's moving the direction. And then the proof is, were those the right interventions that drove down the outcome? So you just have to be very clear on what you're solving for when you bring in the use case. Is it SG&A, workflow efficiency, or is it outcomes? And then really measure that along the way.
Great. And Ruby, I want to get your thoughts on that same topic. Blue Cross Massachusetts, I think it's also been fairly public around just some of the pressures, and you mentioned it in your introduction as well. But curious how you make the case for AI investment, and do you think it's making a dent?
Echo a lot of the same thoughts that Amal just shared. And we're certainly not doing AI for the sake of doing AI, no matter how impressive the demo looks. I'll say that when we look at different use cases, we don't apply a single ROI threshold across the board. And I do think that's the right discipline because different use cases carry different return profiles. They have different time horizons and they create different types of value. And so what we do is we look at each use case and how it ties back to the strategy. And does automation eliminate a step? Does it reduce rework or remove a cost? Those are easier to measure and easier to quantify. But then there's freeing up associates' time. And again, so someone could work at the top of their license. Harder to measure, but equally as important. And then finally, does AI reduce errors? Does it improve decision making? Does it reduce friction for the member? Does it reduce friction for the provider? Again, very hard to measure, but very important. So we take all those things into account when we're looking at use cases and whether or not we would invest in that. I'll say that a lot of it also is about whether or not we have the discipline to actually capture that value as we move forward with the use case.
Super helpful. And as you think about the ROI threshold there, you kind of mentioned some things, it's hard to kind of capture some of that, or I should say, evaluate maybe some of those metrics in the earlier phases. Have you all developed almost like a blueprint or framework to help companies kind of navigate that with Blue Cross Massachusetts and just the procurement process?
Yeah, we absolutely have a framework and step through the different gates in terms of how we look at things. Again, with any type of ROI analysis, the easiest ones are the hard dollar savings and the softer ones are harder to measure. But absolutely looking at that, looking at each use case through different lenses and applying judgment.
Yeah, no, that's great. A lot of good insights there. I hate to cut the conversation short, but we need to transition to the next panel. But John, Amal, Ruby, thank you so much for the time today. Super helpful and insightful, and look forward to continuing the conversation. Well, as our panelists start to exit, I will welcome the next set of panelists to the stage, Akshay, Gigi, and Naveen. Welcome. Thank you so much for joining. We're a couple minutes behind, so we'll try to keep this going here, but really appreciate you all joining. Your operators really at the epicenter of this transformation. So excited to hear your insights. Maybe just to kick things off, give us kind of the elevator pitch on what you're building today. Gigi, I'll start with you.
Sure thing. The audio is coming through all right?
Sounds great.
Yes. Oh, I am with Cohere Health. I lead the data and AI team. What we're building is clinical intelligence platform that connects the payer and provider.
Naveen?
I am Naveen. I'm the co-founder CEO of Daffodil Health. What we do is we automate the out-of-network repricing process end to end at a fraction of the cost of what other vendors do today.
That's it. And Akshay?
Everyone. I'm Akshay. I'm the CEO here at Onos Health. We are the clinical intelligence platform for plans to manage the behavioral health benefits. And so we work with 4 out of 6 out of the large national plans and several regional plans to help them improve quality and ensure more dollars go to high quality care for their behavioral health services. Great to be here.
Awesome. Thank you all so much. We're going to start off with the first question around trustworthy clinical AI, which we teased in the prior session, but curious to hear from your perspectives. So Gigi, maybe let's kick it over to you. What is Cohere's philosophy around trustworthy clinical AI? And what does that really require? One, in terms of the technology infrastructure, but also the human auditability oversight as well.
Yeah, that is an amazing question. In fact, it's the one guidepost that has never moved for the company in the last 5 years. We need to make sure what we do is clinically defensible and has very high integrity. And I think you alluded to this earlier, Margaret, right? It's not just the tech, it's not just the data, it's how we create the right talent pool so that, for instance, I don't have a single development effort that does not have a clinician as part of the development team. If you bring them in at the end to do validation, that's too late, right? If you truly want the AI to allow the clinician to operate at the top of the license, they have to be the one to help us shape the requirements. They have to help us to shape the success criteria at the get-go. So that's some very intentional way of how we structure our teams and bring in talent. But practically, our default is what we call evaluation-driven development. Right? Every piece of tech before it goes out, may it be something that we create, maybe it be something that we build from scratch, or being validated by clinician with very specific use case benchmarks, not generic benchmark that it pass the MCAT, but very specific to the problem it's trying to solve. I appreciate early in the panel discussion that not all AI can see immediate quantitative impact. So a piece that we've been investing a lot in to make sure it's trustworthy is the qualitative analysis. Really understanding is the technology giving clinicians the headspace to think more critically? And I call it the heart space too, right? Like when your cognitive load is lightened, do you have extra heart space to be more empathetic? To go back to what each of us were trained on back in med school and so forth. So I think both quantitative and qualitative. And keeping in mind that medicine changes over time, patients' behavior change over time. So having the architecture in a way that is constantly monitoring, constantly tracking. It's not that it's once you deploy and you can walk away. You have to watch it like a hawk.
That's great. I'm curious, like, how does that translate in sales conversations and in your ROI? Like,
Yeah.
what lands with customers? What are they most excited about?
I think it's very tempting to walk in to say, we're going to automate your existing processes so that you can save X number of, I don't know, headcounts or X, Y amount more effective. Those are definitely metrics that we include as we converse with clients. But what has really helped us engage with the CMO, in fact, even the CFO, is the notion of improving clinical consistencies. Consistency is not easy to measure, but it is measurable, and it does result in better outcome at lower cost. Simple example, right? If we can show that our tech is improving inter-rater reliability, which is always the number one struggle with a lot of clinical decision making, that may not translate to an immediate automation like next week, but it translates to reducing a lot of churns with patients and with payer and with other providers and members. And that ultimately is a cost saving strategy. But
No, that's great. That's awesome. I want to dig on there, but I'm gonna switch gears a little bit. Actually, a question for you. As we all know, behavioral health has historically been, I would say, one of the more friction-full processes, opaque relationships in healthcare. How do you think about the design of responsible AI systems in that context? And how do you help plans better manage their quality and utilization using AI?
Yeah, it's such a good question. Behavioral health, just for context for everyone. So behavioral health is oftentimes a very challenging part for plans to manage because there's no standardization around the clinical documentation. A lot of the clinical documentation comes from single small provider groups. And as you can imagine, the consistency of documentation, if it's handwritten clinical notes or structured clinical notes, can vary pretty greatly. And so our philosophy, as you think about AI, actually, even before we get into AI, what most plans do as a result is that they throw a lot of clinicians and bodies at the problem to try to manage quality at scale. How do we manage quality at scale when there's so much lack of consistency around documentation and understanding if members are on the right care pathway? We're going to throw a lot of clinicians at it. And the challenge with that is that the documentation still takes hours and hours for these clinicians and health plans to get through. And so as we think about AI, we always view AI, agree with everything that you shared, but we always view AI as an enablement function. So it's always an enablement function for your team to work at the top of their license. How do we pull out key insights, have ongoing monitoring of your members to understand if they're on the right care pathway, and really highlight that for your clinical team in a very effective way so that they can know very quickly, okay, this member needs to be addressed. This member is receiving high quality care. This member is not in the right care pathway. And all of our AI generated insights are always human in the loop. And that's something that we take very seriously is that whenever we have an AI generated insight around here's a pocket of area where quality needs to improve or providers are not following the guidelines that you would expect, that it's always human in the loop, that your team is still the one making that decision, but we're leveraging AI as an enablement function for your staff.
That's great. No, that's great. Gigi or Naveen, anything you'd like to add on this topic? I have a couple more questions for you, Naveen, as well, but I'll give the space. Gigi?
Healthcare is incredibly personal. So what Shay said is so true. And I think when we speak about empowering the clinicians to operate a top license, it's truly, I think the patient sees that as a result. Like I'm seeing that every day with our deployed automation with prior auth and clinical assisted review, seeing that the patients are getting the right care at the right time. That's only possible not through tech. Tech is just an enabler. It's the clinicians that are powered by the tech that allows us to do this. So I completely agree with what you're trying to say. And we are getting, and you can see it by based on the appeals volume and the overturn coming back in. You're seeing that as a measurable outcome. So I'm very encouraged by that.
Levine, I'll shift some questions over to you now. You've spent years inside the out-of-network repricing world before building Daffodil. And as many people know, two of the largest legacy vendors today are now in federal antitrust litigation. What do you see from the inside that convinced you that this model, the percentage of savings model, is maybe structurally broken? And what do you think has to change for health plans to be convinced of that?
Great question. So first of all, yeah, thank you for having me on the panel. I appreciate it. And for the listeners, just to give a little bit of context, there is medical spend, and out of that medical spend, about 5 to 7% of it is out of network. And that out of network spend means that there's no contract between the payer and the provider. The question becomes, how do you settle on a price when there is no contract between the payer and the provider for that 5 to 7% of spend? Now, traditionally, we have had a couple of legacy vendors who have essentially offered to reprice these claims for payers, and they've operated on what I would call a percentage of savings model. So on the face of it, this looks very interesting and very fair. So I am your repricing vendor. The provider is asking for $2 million. I asked him to reduce it to 500,000. I saved you $1.5 million. So pay me 20% of $1.5 million, right? So I saved you $1.5 million, pay me 20%. So it seems fair. Now, where it falls down is when you ask the harder question, the root question, which is, how much was it true savings? How much value was actually delivered? Was the savings even real? That's when it begins to break down. So the dirty secret in out-of-network repricing is when a provider sends out a bill for $1,000, they're not expecting to get paid $1,000. The payer knows that the provider is not expecting to get paid $1,000. It settles on an average at $500, which means that the $500 savings is not real. And there's not a lot of effort that goes into getting that reprice, getting the allowed amount down by $500. So one of the reasons you're seeing these lawsuits by both state and federal government is they realized the problem. There was a series of articles that exposed this problem in the New York Times, I think about a couple of years ago. There's a lot of focus on this area. So for me, it became a question of, okay, if you can automate the repricing process end to end using technology, you should be able to get this done at a fraction of the cost these legacy vendors are charging, and the payer can keep more of the margin. So that question essentially became the genesis of Daffodil Health.
Right. I'm curious, as maybe these shifts are underway, like what are you seeing in the sales conversations? Like how does that play back? Where do you see the pushback? Are they trying to kind of build that internally themselves first? What does that play out in your world? How'd that play out?
Yeah, I think in general, I think we all know that payers are conservative. I think that is understandable. And I think we need to work with the culture of the payers, right? So that's one thing. Now, the things that have gone in our favor in terms of getting things across the finish line is one is the hard ROI. Payers are under severe margin pressure right now. So any solution that results in hard dollar savings and hard margin improvement is something that gets attention, right? So that's one thing that helps us. Second, you asked about where is the pushback, right? I think one of the pushbacks that is common is the system is operated in this particular way for 15 to 20 years. The regulatory pressure on our network, on NSAs literally started in the last 5 years. So one of the challenges is inertia, but also the legacy vendors are already in the workflow. So the payers think they're already in the workflow. Sometimes it also board relationships that go back a long way between the legacy vendors and the payers. All these cause issues, right? Now, what helps again is when you reframe the conversation. For example, one of the things we say is, if as a large TP or a small regional plan, you are spending $5 million instead of $1 million to get a job done, that is $4 million a year. Think about what happens, how that compounds over 10 years, how much value you're leaving on the table. That typically gets the attention of a CEO or a CFO and begins to become a focus area, right? So that helps immensely as well. I think the last question you asked was the build versus buy. Look, nobody goes around building their own CRM system. What Salesforce does is not magic. If you put a bunch of smart engineers together, they could build a CRM system. I think the reason they don't do that is one reason is economies of scale. If the same product can be built for 1,000 payers, the cost is going to be so much lower. I think that's one big reason. The other, of course, is I think a couple of your panelists referenced in your previous panels, which is AI is a core competency. So a lot of peers don't have that core competency. So when you have companies that are built around AI and a domain expertise, why wouldn't you work with them, especially when the cost is also lower?
Yeah. No, those are great insights. And Akshay, would love to get your kind of thoughts on this kind of sales motion discussion piece as you think about navigating pretty long sales cycles, and Naveen touched on a little bit, but what are some of the patterns that you're seeing around that behavior?
Yeah, I think to touch on it, hard ROI is always is a key component there. I also think, especially when you think about AI within these health plan sales, I think the thing that I would always suggest is start with a concrete problem, right? A lot of health plans, you'll see that they are very eager to leverage AI. They're very eager to do, which is fantastic. It can completely transform how the industry operates. But if you do a large scale deployment trying to solve for multiple things, you won't solve anything well. And so what we always suggest to our partners is, hey, we can have a roadmap of how we continue to build and think about how we can continue to improve additional operations, additional processes, fundamentally to Juju's point, make it easier for members to access care, get the right level of care, be on the right care pathway, improve outcomes. But let's start with the concrete piece of that. Let's start with the specific area. And so specifically when we work within behavioral health, and so what we often say is, let's start with, if it's outpatient therapy, it's ABA, it's part of the US process, but let's start with the concrete specific area that we can make sure we deliver ROI. And then over time, we can continue to grow that, because if you try to boil the ocean, you're not going to do anything well. And then you'll have very long implementation time, a very long sales cycle, because you're trying to prove the value of what the ROI will be, what AI will bring. And so we always take an approach of, let's start with the concrete issue. Let's start with the concrete area that we know is a pain point for a health plan. Let's start there. Let's deliver, expand there.
Yeah.
I'll add to what you said too, is walking with very specific problems we're trying to solve, but be prepared architecturally to be the platform, right? So that it's not, you can bolt onto a new clinical area, new use cases, so that the payers don't have to worry about a proliferation of more and more vendors, right? You land and
We're
expand.
systems.
Right? You land and expand. And yes, use cases and business cases, but architecturally you have to be ready to make that move, right? So to us, that's been great. I don't think we've ever had a case where we land and do not expand.
Yeah, that's a great point. Because you also want to avoid the point solution piece too, which I completely agree with. And yeah, that's exactly right.
Yeah, no, I think I would say I'm well in agreement with that. So I think it's like a crawl, walk, run. So you need to go in, you need to take the payer along on a crawl, and then get them to walk and then run, right? So it's a very phased approach, very iterative approach. I think that works well with payers.
Great. I hate to cut this conversation short. We've touched on some great topics here. As Nathan kicked off the first conversation around starting with the friction points, so you guys just both described that as in the sales cycle as well. So cool to come back full circle. But I hate to cut this conversation short. We got to wrap up. This has been awesome. Naveen, Akshay, Gigi, thank you so much for your time today. Really appreciate you joining us.
Thank you. Thanks,
Sure.
Thank you for having
Appreciate
us.
Thank you. Other panelists drop up. I will close here quickly. So we're at the beginning, I think, as everyone heard today, and merely a structural shift in how health plans are operating, and companies and leaders in this space are building and buying. Thank you all to our panelists for joining. We really appreciate it. Please reach out to our team here at Flare Capital to continue the conversation, and keep an eye out for our next quarter's roundtable, which is scheduled for September 22nd. Thanks again, everybody, and we'll talk soon.